Welcome to Free World Investing. Today we're going to be going over the Choppiness Index. A Choppiness Index is not a directional indicator at all, in the sense that it doesn't really tell you which direction to go, and it's not really supposed to. The Choppiness Index is supposed to decide whether or not the market is going sideways or is within a trend. It does this by calculating the average ranges and seeing how close they are on a logistic function. So the higher up it is, the more sideways it's supposed to be, while the further down, the stronger the trend's supposed to be. And the average point period is of a 14-point period, and sometimes it works, sometimes it doesn't. If there's a point of sidewaysness, like once a market becomes choppy, it's the theory is after it's been choppy for a certain period of time, there is supposed to be a movement correlating with that very soon. So you can use this with the relative strength index so as well, or another momentum indicator, and if you wait for a certain amount of choppiness, it might indicate a better time to trade within a momentum indicator. Or you could use this as a trend confirmation tool. So if it's down to 38 or below 38, you can trade and try to continue on with the trend. And it works here and there. Like right there, it really, you would broke about even. Right here, you would have broke about even. But you can also wait till the 50 line too. If you wait till the 50 line, like right here, once again broke even. Right here, I don't really got too much. Like I said, a lot of times you really want to use this with another indicator. Like we'll throw in a relative strength index so I can show you. Strength index set to 14. So right here we can see that it's already in a trend, and we can see the choppiness, and you can see on the RSI it was in the overbought area, which would have told you, hey, maybe I should make this trade. But then you keep on going, nope, still in a trend. Boom, now it's past the 50 line. Perfect time to execute the trade. Now you would have had to do a little bit of finessing right here. See, as soon as it started to get choppy as well, you would have seen that up here that it was getting choppy while you're at this line, which would be a good indication to get out of the trade. And then you could do the same thing right here a little bit, because it was still a little bit overbought, not a lot, but since it was so choppy, you might be like, oh, it might go down. And we can see right here on the RSI it's completely in the trend, so you would leave it alone. Completely in the trend, so you would have left it alone still anyways. Right here, because of how choppy it was and because on the lower side, this would have been a good reason to make an up trade. It wouldn't have got very far. It would have got to right here before it became too choppy, but you would have scalped a couple pips right there. Now there's sometimes it doesn't work, like right here, but it's good for scalping a couple pips here and there if you're a high volatile trader. I don't use the choppy index all too much, but it does have its uses. It's, like I said, it's good to not get into the wrong trades. Like right here would have been an awful trade to get into the RSI with, but we could see right here, because of the choppiness, that it would have been a bad trade because it was so far in the trend that it looked like it might still be going up as well. Same thing with right here. So it's a good indication if you're using a momentum indicator, just to get a second guess. It doesn't always work, and sometimes it will stop you from making certain trades, but overall it does help with the indication of whether or not you should be taking a bet against the trend. That's going to be all for the choppiness index. I hope you enjoyed the video. If you did, please give it a thumbs up and subscribe to the channel and check out our other videos. Have a good day.